Hi guys, Harry Yotis here. I've been a professional trader for 20 years, started my career way back in 2005, and for the past 10 years I've been trading my own account. So let's get to it. Last day of the year. Happy 2025. It's over. We're going to start 2026 soon. This is Wednesday, December 31st on a chart of the S&P 500, which we always look at first, okay? It's a down day, down 0.75%, 0.75% down. It doesn't look good if you just look at the day, but overall, it's been a great year. Okay, and the big news of the day is this: the silver smash continues, which we'll get to very soon. A little bit of shenanigans going on in that market, but let's talk about the S&P 500 first. The technical setup is still bullish. Let's bring in the moving averages, still trading above the 50. It'd be nice if we hit it and then go back up again. You never know. But, oops. But obviously, my target here of 700 to 720 never came. So let's just, I don't know, get rid of it. Yeah. Okay, so the target never came. Doesn't matter. Still a good year. So, what we want to talk about is a technical picture. We see the moving averages hitting the 50. Above the 50, not good. I would like it to hit the 50 going forward. And by the way, what I wanted to say was that it's normal for the price action to go down before the new year, and even a couple of days in the beginning of the new year. We had that. I mean, let's get rid of the moving averages first. Just clutter everything. Okay. I mean, we had that in here in 2020, beginning of 2025, end of 2024. You see a downward move in the S&P 500. I don't know if you guys can see, but what here is the December 30th, 31st. So down. Yes, it chopped even going down into January, but then it popped up again, okay? And then we get the tariff scare, which was whatever. But what I'm trying to say is that you can go back other years, you can see the same type of pattern developing. So what I wanted to make, the point that I wanted to get across is that it doesn't have to be a bad thing going forward, okay? And as you see, the technical picture is still higher lows and higher highs, okay? 1, 2, 3, still higher, and the higher lows picture still is intact. So technically speaking, nothing has changed, okay? And this, like I said before, we're still pretty neutral in the RSI and in the PPO, which is the MACD. So we still have a very neutral outlook in the stochastics, and plenty of room to go higher. The fear and greed index is almost at fear. Look, market momentum is already at fear. Okay, neutral, and look, the put call ratio is still at extreme fear. People were buying puts into this move. So this bears repeating that you have a lot of people still scared at the highs. Wall of worry was neutral. And what I wanted to mention is that we were in greed for like 1 or 2 days and then back down to neutral. We never really saw a solidification of the greed and extreme greed setup. Okay, so that's why I'm still bullish going forward, and the technical picture is still bullish. Okay, so let's get to the big news of the day. Silver smash continues. Okay, let's look at silver. Silver is down. Physical silver is down in London. That is, this is the contract for differences in silver. It's the European London market. It's down about 6.85%. Okay, I was hoping we get down to here the 62.5 to the 65 range. We'll see. We could get there going forward. I don't know, but what I wanted to look at here is the silver futures. Okay, this is the Comex. Okay, and the silver futures are down 9.7%, almost 10%. Okay, what this does is just alleviate the overbought conditions. Now we're well into the RSI being neutral. So we could try to consolidate here. However, like if you look at comparative charts, like not always, but we've looked at the Shanghai silver price. Okay, we want to always compare the Shanghai silver price to the Western price, because in Shanghai, they are demanding delivery, physical delivery, okay? These are big players demanding physical delivery. And look at the spread between the blue line is Shanghai and the gray line is the West, okay? As you can see, it's getting larger. the discrepancy is exacerbated by what we saw in the silver market. And why is the case? Why is that the case? Why did silver go down a lot today, but in Shanghai it's relatively, like if you look at the Shanghai contract here, it's basically unchanged. Okay, it's trading at 17,981 per kilo, which is about $80 equivalent. So we have $80 equivalent here, $80 equivalent in the Shanghai contract, which is basically asking for delivery. This is like basically a proxy of the physical silver price. And in the Comex, we have it at 70, literally a $10 spread. Okay, why? Well, because we had this coming out. Gold, silver prices fall after CME raises margins. Okay, so you have the CME raising margins on gold and silver, which, people think is going to be a repeat of the Hunt brothers, and the silver price goes down. It's just a natural flow. However, that exacerbated. It didn't go down in China or Shanghai. So in China, nothing is going up. Like people in China in the East are demanding physical, and that is sort of putting a widening spread between Shanghai and the Comex. And the reason why this spread, which is basically this spread right here, okay, this spread is not being filled because in the Comex, people are not buying this contract because they can't actually source the physical. They need to actually have physical available in the Comex vaults for the ARB here to make sense, to close. Otherwise, it's not going to close. You're going to if there is no ARB to be made because there is no physical silver in the Comex, then what you're going to see is silver continue to go down here in the West and go up in the East. Okay? And it'll almost make the futures markets in the West irrelevant. The price is being set right now by the East. East is where the precious metals are going in terms of the hub. I mean, you could just look at gold as well. Gold is down too. The price of gold is down too. But did it have an effect? No. Why? Because the miners, if you look at the miners compared to the metals, the miners are performing much better than metal. Okay, GDX for gold, let's say, it's down like nothing, minus 1.23%. Look at this chart. Okay, it's still relatively high. It hasn't moved down at all. It's still maintaining this breakout. It's almost like a retest of the breakout level. Okay, we're looking at GDX here. The breakout is 85, 86, which are huge level. Okay, so what about the silver? SIL is the global silver miners ETF. Look at it. It's still maintaining that same GDX-like pattern. Okay, and if we want to see how the miners are doing, even the juniors too. Okay, which is SILJ, same pattern. Why? Like if you want to see how they are performing vis-a-vis the metal, you go to SIL divided by silver. Okay, or you can do it SI, the silver futures. Okay. Look what you have. It's tough to see, but today it's green. It's up. I mean, they haven't been performing well. Look at the silver has been outperforming the silver miners for, since September because the price is going nuts. People in China want it, and that has made the silver price go much higher than the actual silver companies. But now the silver companies were bid today. Okay, that means they didn't go down as much. I mean, you could just look at SIL on its own. See? Oh, I'm just looking at, I'm looking at not the futures, but the miners. Yeah, SIL. Okay. Look, it's down 2.33% today. And remember, we saw SI down 10%. Okay, 9.74, whatever. So when silver goes down 10%, the miners should go down 15, 20%. It's like a destruction. Okay, but no, not this time. This time the silver miners, SIL, just went down 2%. This outperformance is evident that the miners are not really reacting to the silver futures price in the West. Rather, they are reacting to the actual physical price in the East. Okay, so that's why they're just down 2-3%. Like in the East, it was flat. So you're getting a schism in this market between silver in the West, silver in the East, and the miners. Okay, the silver miners are playing a game where they are not reacting to the paper gold contract in the West. They are reacting to the physical metal price globally, i.e. China. Okay, this is the important thing to take out from this silver move today. This is the silver price. This is the silver price in London. So it's different than the futures price. This one only went down 6.86%. So you can see a schism between futures prices and physical prices. Okay, so the lesson here is that there's a bifurcation. The miners are actually reacting to physical silver, and the important move here is that the physical settlement and action in the precious metals is in the East, not the West. The West is losing relevance. This is a big shift in global geopolitics. You're having the LBMA in London and the Comex in the US losing relevance. This is not good, okay, especially for the West. So let's leave it at that. Okay, what I think will happen for SPY, I think we continue to go higher. We might drop a bit in the beginning, but I think we can in the beginning of the new year, and we go higher. And the new year is key for silver too, because January 1st, 2026, which is tomorrow, which the markets are closed, but on Friday when they're open, China is curbing exports of physical silver from their markets. Like you won't be able to export physical silver out of China. Okay, there are some exceptions, but that's a big move. This would probably exacerbate this gap between East and West. Okay, so I'm really looking forward to seeing what happens in the silver market in the new year, and I suspect we continue to go higher in the general market as well. So that's it, guys. Happy New Year, and if you like what you hear, of course, like and subscribe, and leave a comment, and I will always get to it as fast as I can. So take care, Merry New Year, and I'll see you guys later.